Hey everyone! Over the last 10 years, the commercial real estate investment landscape has been going through a very significant transformation. And this change will hold long-term implications for the industry, especially if the trend continues on its current trajectory for a few more years. This trend isn't related to the real estate itself, but rather to who's buying commercial real estate. If you rewind the clock back 20 years, and look at 2001, about 20% of the commercial real estate sales volume was acquired by REITs, 31% was acquired by institutions, and about 39% was acquired by private investors. 15 years ago, in 2006, before the global financial crisis, the buyer composition leaned in the favor of institutions. They represented 36% of the acquisition dollar volume. The REIT share of the market was down to about 12%, and private investors remained at 39% of the buyer volume. 10 years ago, in 2011, and in the wake of the financial crisis, institutions were back down to 31% of the total sales volume, REITs were back up with 25% share, and private investors were down to just 29% of the buy-side dollar volume. Since then, we've seen a pretty steady shift in the market, with private investors becoming increasingly active. Since 2011, private investors have gone from comprising just 29% of the total commercial real estate dollar volume to 55% of the market, by far the most dominant share. Think about that for a minute. More than half of the total money invested in real estate over the last 12 months came from private investors. Was this pandemic induced? Well, probably not. In 2019, before the pandemic, private investors constituted 51% of the money. So it looks like this is a trend that could carry forward. Many of you may be thinking that this reflects a bias towards smaller properties. Yes, private investors dominate the sub $10 million commercial real estate segment, acquiring about 80% of the commercial real estate dollar volume over the last 5 years. But looking at the $15 to $50 million price tranche, which has traditionally been considered institutional, private investors have made dramatic inroads. Over the last 10 years, private investors have gone from just 34% of the capital in this quasi-institutional segment to 61%. Let me reiterate that. 61% of the total dollar volume invested into properties priced between $15 million and $50 million so far this year was placed by private investors. If you cut the data by property type, there are some differences. Under 15 million, the market is dominated by private investors. In 2020, these investors placed 91% of the apartment capital, 82% of the retail capital, 75% of the office capital, and 64% of the industrial capital. Between 15 million and 50 million, private investors placed 75% of the money that went into apartments, 60% of retail, 47% of office, and 33% of industrial. So what's this mean? First, private investors are becoming an increasingly dominant force in commercial real estate. They have access to large amounts of capital, they have become increasingly sophisticated, they tend to be far more nimble during crises, and they are moving up into much larger assets than previously believed. Second, private investors are migrating into a variety of different property types. They have long been the leading investor in apartments, but over the years they have become increasingly active in retail, office, and now industrial assets. And third, private investors are acquiring a larger portion of upper tier properties. Their price threshold is moving up into the $20 million, $30 million, $50 million range, and even higher. Private investors, who often underwrite assets more aggressively, make decisions more quickly, and can frequently move more nimbly, may soon be the dominant buyers of all but the largest trophy assets. And that will change the commercial real estate investment playing field. This could be an increasingly important consideration for investors who keep their eyes on the horizon.